What's up, everybody? Welcome to the Emerging Manager Growth Show. It's Guy Costin. I'm joined by Chris O'Grady and Anna Blumenfeld. So welcome. I think as you guys just saw, we did a little promo, trying some new stuff around Dakota Studios. The bigger point there, we'll talk about it during this show. Video really works for investment firms. We've been literally hitting grand slams with Edgewood Management doing their video. The clients love it. It's been really spectacular. We'll touch on it a little bit. So as you all know, this show is built for emerging managers. Our firm, Dakota, has worked with emerging managers for the past 17 years. The goal is to be able to do more with less. And today, there's no forum that we've ever seen where we can come together as investment sales professional working in an emerging manager and basically a forum to ask questions and learn. We're going to cover a ton in the next 25 to 30 minutes. This show should conclude right around 1:30. Please ask questions. We want to make sure you guys get extreme value. This is another kind of slightly one-off version of our Rainmaker training that basically demystifies everything as it relates to fundraising. So we're so thrilled to have you all. Let's jump in. Chris, why don't you, if you wouldn't mind, just going through the structure of the call. I'm speaking from our offices in South Florida, and Chris and Anna are in our studio in Philadelphia.
Yeah, absolutely. Guy, well, happy birthday, Guy. Guy's 56th birthday today.
Happy birthday.
I assume 56 because I'm about 6 months behind you. No, thanks everybody for calling. And yeah, please ask. We already have the queue full. I mean, Genevieve, we're going to release some of those questions in about 10 to 15 minutes, but the questions keep coming. Look, we don't have all the answers, but we just know if you stay in front of people and you communicate about your strategy consistently, you're going to have success. Anna and I were just on a call with the big local family office, and I don't think there is a near-term opportunity, but we learned a lot, and you keep learning, and things add up. So we're here to provide all the insight and knowledge to get in front of those people that would probably be an early adopter. And Anna's done a lot of work with the pensions in terms of those emerging manager programs, and obviously we'll get into that later. All right, structure of the call. Guy just gave his opening remarks. Chris. Anna is Anna. What is an emerging manager? We're going to define that, and I think those are pretty liberal terms, but they encompass a wide swath of assets. So emerging manager is not $100 million. It's a lot bigger. Fundraising roundup, talking about the successes everybody's had and how we go about fundraising, kind of a offshoot of Rainmaker. Conference update, we featured that on the last 2 Dakota Live calls. Anna Walsh gave a great promo of our conference feature in Marketplace. That is becoming one of the most popular features in Marketplace, just because it is conference season. People are out and about, and as you're traveling, if you're going to a town for a conference that is marked quite well in Marketplace, then use the Marketplace data to get meetings around that conference. So we're excited to go through that. I think Guy's going to give his concluding remarks and announce the next show. So with that, Guy, turn it over to introduce Dakota. And by the way, do ask questions.
Yeah, and Chris, this is in this call, we're going to focus on RAs. We're going to share with you some of the leading RAs that we know allocate to emerging managers. And as you know, Dakota, we're a fundraising organization. We've raised over $25 billion since our founding in 2006. And so our team's out fighting the fight every single day. I would say if there's one theme that we just wanted to make sure that we share with you, a lot of people are saying, oh, it's slow. Right now it's been tough. And yeah, we had 13 years of kind of a bull market, if you will, and there's a lot of wind at our back. But I will tell you this, people are taking meetings. We understand they're hard to get. We're going to talk about the structure of the email that you want to send. But I think the theme with the RAs for an emerging manager, RAs are always looking for new and interesting ideas. That's the bottom line. They don't really, especially if you have a private fund, I'm going to tell you, if you're on this call and you're an emerging manager and you have a private fund, we talk to RAs all the time. This week, this is what we talk about in the fundraising roundup. A few things we learned this week. There is no database in any way, shape, or form, we might end up creating it, that has a database of currently offered private funds. What does that mean to you and to us? That means we have to be reaching out, introducing ourselves and our strategy. We do market a private fund right now called Spruce. It's a construction loan strategy. So we're out there every single day. We did a call yesterday with Jeremy Beal at Morgan Stanley. I mean, we're in the fray, if you will. But the only way it works is when I talked to BDO, they said that they rely on their network to find new private fund ideas. So Chris, let's just talk about that for 1 minute. About
we heard that from, obviously we're remote, so we're going to, apologies to step on you. But our last speaker, Genevieve, when was Andrew Cry? Was that 2 weeks ago? Andrew Cry from Crescent Grove basically said, the question was, how does a salesperson get in front of you? And he said, my network. if we have a trusted source that we've known, that we've invested with, shows us an idea, we will take that call. So that's dovetailing what you just said. So why don't you expound on your point?
Yeah, I just think that right now there's the private world is exploding. I think, but listen, this if you have a public equity strategy, trust me, we're out marketing every single day public equity strategies I have for 25 years. You never stop setting up meetings, going to cities. It works. It might be drudgery, we understand, but we also learned in this whole private fund world there is no source of truth. And what does that mean? The salespeople have to be calling on them. We have an approach, which is our city scheduling approach. So our team always has 5 cities at any given time that any individual salesperson is scheduling for. We circle 9, 11, 1, 3, and 4:30. So this is kind of part and parcel to our emerging manager coaching program, right? Which is, this is kind of as a form for that. Make sure if you're an emerging manager and you're not sure, you need to be scheduling meetings on a consistent basis. Unfortunately, if you're in investment sales, you have to get really comfortable that you are a professional meeting setter upper for yourself. As frustrating as it may be, it's the only way forward. 20 to 25 emails have to go out. All the asks have to go very consistently. We've seen ridiculous success of getting meetings, in that approach. So that's check the box number one, kind of key takeaway. Use city scheduling to your advantage, and know for a fact that if you have a private fund that you're marketing, there's no place that they're going to find you. So you have to find them, and you have to tell them about yourself. So, and we'll talk about the email and the shortness of the email. But Chris, why don't we get into, because this is and maybe
let's
RAs.
I mean,
talk about some RAs and
let's before we get into specific RIAs, why don't we let's pick on the worst possible salesperson. Oh, they're not going to return my call. Oh, they won't take my call. Oh, they won't see me. There's all these myths out there. There's a lot of myths to be demystified, and they're obviously offset by just action. But Guy, why don't you just talk about, you've been doing this a long time, talk about some of the myths that we hear that can be demystified relatively quickly.
So, I have a short track record, right? Still have to get out and talk to people. By the way, time flies. You'll have a 3-year track record before you know it. I have under 100 million in assets. I mean, I was just on a call today, and there's no doubt, but his strategy is 3 million. And no doubt that is a ridiculously hard uphill climb. So, Chris, we were going to talk offline just about finding seed investors. So, and who would seed potentially a hedge fund that has a 5-year track record, a really strong track record for a piece of the GP, right? Sometimes you have to be creative like that. But if you're over 25 to 50 million, RAs have discretionary capital they can allocate. Another myth is, hey, I want to get onto a platform, but we don't have a 3-year track record yet. So I'm going to wait until we have a 3-year track record. Bad idea, right? Start on a parallel track. Obviously, in Dakota Marketplace, we have all the banks and broker-dealers and platforms that you'd want to call on. They're all there. Start those sales cycles now. Just think of those as kind of planting future seeds. It's a little R&D. Absolutely make those calls now. Introduce yourself. Get on the radar of those due diligence analysts and their asset classes at all the bank and broker-dealer platforms. Start with the largest. You never know. You make the phone call. You check the box.
Well, let's interject on that. That's a good point, because obviously when, they say you don't want to buy insurance when the house is on fire, you won't be able to get it. But I think what's happening, we saw this from COVID, that there's such a quick reaction mechanism to investors. So there might not be an opportunity right now. Let's pick on distressed. Well, things aren't really distressed. There are a few things, right? That company out of India and things like that. But you want to set the table for the imminent outcomes. So start making your calls now that something might not manifest itself for 9 months. We were on a call today, the large multifamily office, and the gentleman said, I've got 3 things on my plate. Send this to me. We'll get to it. But I have a preferred stock holding coming off in 9 months, so I'll have capital to deploy. You wait 9 months to make that call. He's already gotten 9 months worth of calls. So there is a discount. We all value the discounting mechanism in the market. Apply the discounting mechanism to marketing, because you want to get in front of something that's going to germinate in a year, and that all starts today. But drudgery is not an inappropriate word. Do you have anything to add, Anna? Some ideas of some of these early adopter RAs or the emerging manager programs that you've come across?
Yeah, I mean, we have some examples. I jotted some down. We can get into those. But I think just to your point, getting in front of them early. I had a call right after our call earlier this morning, and the guy said it was with Sanctuary Wealth. They're very quickly growing aggregator of RIAs, big breakaway teams from the wirehouses. And he said, look, we have a very full pipeline in terms of our due diligence on private funds, and we're really looking at evergreen structures right now, but we might look to add to the sort of private, more illiquid offerings, in end of Q2. So please give me a call then.
Yeah, there's a thesis going on in the marketplace where let's pick on RIAs because that's what we're talking about. Is okay, I want you to give me my hard-earned money for you to earn a rate of return. Okay, if you just want to pick managers, you might lose to a passive option. But if you want to look at alternatives, so this is nouveau, but this is validated from our speech today, and a couple of large family offices, and everything's viral. Everybody thinks together. The RIA community is looking at the world in 3 buckets: liquid opportunities. Secondly, liquid, like my house, T-bills, insurance policies. If something goes wrong, my family's fine. Bucket 2 is everything capital markets, from small cap value to venture capital. Bucket 3 is how do I get to the next wealth level? And bucket 3 is going to be co-investment, concentrated managers. It's going to be unique strategies, super duper concentrated, like 2-3 stock positions, things like that. And that's where these opportunities lie for a lot of the listeners on the private side. That is the bucket that every advisory firm has that's funding, number 1, to drive performance, number 2, to attract clients. Otherwise, you're competing against low fee options, and keep that in mind. But let's talk about some of the early adopters. And listen, this is a closed forum, so we don't need to run out and make phone calls immediately. But you and I have called on a lot of these over the years. Yeah. But there is a quorum of early adopters that will look at a strategy. And I'm going to pick on Foster and Motley in Cincinnati. Everything is passive on the equity side, but they will look at interval funds. They will look at LPs. Everything is active on the fixed income side for $1 billion RIA that you might gloss over. But trust me, they've got chunky allocations into some strategies that we know well and everybody on this call knows well. Ballantine,
so Chris,
go ahead.
Yep. Okay. Yeah, I was going to hit Ballantine. I was just going to kind of go through it because it's in our database. I'll kind of go slowly, but it's Ballantine in Atlanta. It's Ballantine in Boston. It's William Blair in Chicago. It's BDO in Baltimore. It's Crescent as they're growing aggressively through acquisitions. It's Wealthgate and BSW in Boulder. It's GEM and, in Detroit. It's Riverwater Partners in Milwaukee. It's Pitcairn in Philly. And to close it out, Columbia Pacific in San Francisco. So that's just kind of a lead in. And then, as you all know, the one thing that you have a really nice central research that will look at emerging managers: Dynasty, Focus, Hightower. We already mentioned Sanctuary, First Republic, and Rockefeller. And I just really can't emphasize enough to the audience, as hard as it is, and no one knows better than us, rejection, email, the whole thing. What Anna just went through, right? I almost don't see myself as a fundraiser or our team as fundraisers. What we're looking to do is get meetings with qualified buyers and do it in size and be asking a lot and search for the quick no. So when I do my Rainmaker training program, and this is on this call, this is a very, very important point that I'm making because I know a lot of people don't do this. And so when I do my Rainmaker training, generally people want to know 2 things, okay? Like, it's how should I be pitching? What are some of the nuances of a pitch in a meeting? And then second, you talk about this killer follow-up system to 10x leverage my time. Those are the 2 biggest questions I get. So if you're calling on RAs and you're an emerging manager, okay, this really goes for all of us. But if you're an emerging manager, the thing that will kill you is time, okay? If you can't get the quick no or the answer from the buyer that you're calling on very quickly, it's going to crush you over time. Why is that? Because you're going to believe you're somewhere that you're not, okay? And let me explain what I mean. We've all done it for years and years and years. You do your 45-minute meeting. You have all the niceties. You go through the strategy, hopefully articulating who you are, what you do, how you do it very nicely. And then a lot of people say, hey, Mike, it was really nice. I had a really nice, really great, cool, follow up. I'll send this, got it. Then they walk out, okay? And then they go back and they're like, okay, what's my next step? And that's what this guy asked me. He goes, Gee, what's my next step? Like, what should my follow-up cadence be? I said, why are you asking me? I said, you need to ask your prospect, okay? like as far as I'm concerned at Dakota, it's criminal to not ask the two hardest questions at the end of a meeting. You sit down, hey, Mike, really enjoyed today. Just two quick questions. Number one, is this a strategy that you could see in your client portfolios? Because a lot of times you're pitching, a private equity, a private fund that might be in a particular sector, what have you. So then right there, your follow-up, they're going to tell you either, yes, this is something we would invest in, or no, right? And then you know exactly what your follow-up is. And then if they say, yes, this is the type of strategy, let's say a large cap growth, hey, Mike, do you see yourself doing a search in the next 12 months in large cap growth? Oh, no. Oh, yes, I do. Okay. So from that, asking those two hard questions, okay, that a lot of people don't do, that is the ultimate time saver for yourself. So I can't stress enough how important it is to ask those tough questions to get a status of where you stand. And as far as I'm concerned, if you're doing that, what ends up happening is you're looking for the quick no. But if you ask the tough question, you get the quick no, and everyone's scared to get the no, which, trust me, I'm a salesperson and I have the same emotions as everybody else. It's hard to do, but if you do it, you're going to know exactly where you stand on each account. I had one guy, one of our favorite Dakota, just all of our customers are our favorites, but Chris Greenwell's especially, just been so enthusiastic about us for years and years and years. And he and I had this exact conversation. I told him that. He took his PM to a meeting with a state fund in California. They get finished the meeting. He asked that question. He goes, I just got to ask you, do you see yourself ever investing in a type of strategy like this? The guy goes, no way. And Chris is like, what? Why did you take the meeting? And he goes, well, I thought it was a really interesting idea. So my point is, Chris then knew, right? Because how many times at Dakota we banned the word great meeting? I'm spending a few extra minutes on this topic because I believe as sales professionals, we owe it to ourselves to ask that hard question, to get that status. You've earned it. You did the 45 minutes, you told your story, you've earned the right to know, hey, where do we stand? Is there something that we can do or not? Because I'm an adult, I can take no for an answer, but I also don't want to just be wasting your time and wasting my time.
Well, the thing is also, Guy, but think about this too. Today, no. But as salesperson, and by the way, we're getting to some questions, so thank you very much. We're going to get into these questions, but today, no. Unless everybody's passive in equities, then it's a permanent no. If you're a DFA, which is a fabulous firm, probably a no. But alternatives is probably a yes. But if they say, I invest in active equity managers, but not today, but as salespeople, we try to call on people 3-4 times, once a quarter. Things can change, but that's a whole different level of just follow-up system, and we're going to get to that to the end. All right, it's only right to go to some questions, Guy. And actually, here we are talking about stuff down the road, but we have a question right at the beginning, the genesis. Who are some providers that are willing to partner with an emerging manager to set up a 40-act fund where the economics are reasonable? That is dead bullseye for us. Guy, what's the answer?
Okay, so yeah, it's really, really difficult to get reasonable economics on your own mutual fund. Mutual funds are ridiculously expensive to launch. You need some level of seed capital. Obviously, the SEIs, the U.S. banks, those, and we'll follow up after. Genevieve, please just make sure that we send out the list of email providers. And then you can also go the sub-advised route, right? And in our database, we have all the sub-advisors. So sub-advisory mutual fund is an account type, and you can just go in. If you want to run a report in accounts or in the reporting section, I would call on all those mutual fund sub-advisors. That's another way to get in the mutual fund business via someone else. But I will tell you, launching a mutual fund, there are no shortcuts to the expense. They are just unfortunately very expensive. You're talking to a guy who's funded a mutual fund since February 14th of 2018, and it's still only at 45 million. So I feel your pain. All right, Chris, next question.
But if you have the assets, to that question, if you have the assets and you can go to a series trust, we're talking SCI, United Missouri Bank, US Bank, yeah. So SCI, US Bank, United Missouri Bank, there's a couple other boutique ones. So there's that answer as well. All right, next question. And thank you for this, because this speaks to what we're doing right here. Slightly different angle, but could you give an approximate minimum figure for digital marketing to complement fundraising activities for a new and existing fund? So in other words, the expense, marketing expense may not be expensive, but there's a lot of addendums, which is digital. So Guy, we've done a lot of these.
If you're talking video, if put it this way, listen, We have an amazing video team. I'm not selling our studio, but our studio, we produce video for investment firms every day, every week, everything. We do it at a fraction of the cost of what it would take you to do outside. So it's between 5 and 10 grand kind of a year. Digital marketing, I would only do video. And then I would consult with us because we'll tell you exactly how to produce the best videos that due diligence analysts want to watch. Other than that, emerging managers have to do more with less. And so I went through already, I'm just going to repeat it. The most important thing is city scheduling. If you're a member of our database, we already have done the hard work for you. You know who to call on. We have that already. That's key point number one. Then you just have to send the emails and do city scheduling, which costs nothing. It's just time and energy. And we'll talk about the follow-up, and then you're going to asking the tough questions. I know that sounds kind of as a weird technique to save you time, but I think as you just went through it, it's just nice to know where you stand before you walk out the door. All right, Chris,
Guy,
next
all right, Guy, I'm stepping on you, Anna, but this is Anna's idea, so I'm going to just repeat it for Anna. A lot of very well-educated people out there, well-credentialed, MBA, CFA, you learned some really fancy stuff, but my God, why didn't you tell me in business school about a subject line? Let's talk about that, Guy, because it is so simple, so easy, but so difficult. We jigger our subject lines. I am convinced the subject line gets you the meeting. Tell us about the subject line.
Chris, there's no doubt about that. So if you think about each allocator, we're talking RIAs, but also all analysts are getting 200 to 300 emails a day, and they have for years and years and years. So we have to do the hard work for them by having a subject line: meeting request, March 2nd at 9 a.m. That's your subject line. Why? Because they know that's a meeting request. I wrote an email. So remember, anybody on this call, you want to send me your emails, I edit them. I edited one this morning for one of our customers, and I love doing it. I'm happy to do it. He called it wordsmithing. I think a little bit it's wordsmithing, but I really think it's, why should I care? Who are you and why should I care about taking an appointment with you? Right? So this is what I wrote. I wrote something along these lines. I wrote, if I can, I'm going to tell you exactly what I wrote. If you'll just give me 10 seconds. Okay. Miles, I work for blank firm, a $3.8 billion private equity real estate firm that owns over 18,000 apartments in the Southeast and Texas. We're coming to market with our fourth fund with a target raise of $500 million. I'm not going to tell you the name, but an extremely large private equity firm was our lead investor in Fund 3. In all likelihood, they will be in Fund 4. I'd love the opportunity to introduce myself in Blue Atlantic, exciting investment opportunities we are seeing. So just straight into the point, right? If they're into multifamily, if they're into that whole thing, they know exactly where you stand. You have the credibility with your assets. You have the credibility with your lead investor. You're on Fund 4, which naturally gives you even more credibility, right? So it's not, first-time fund, if you will. And I simply said, you got to close with, can you meet on March 2nd at 9 a.m.? Has to be a clear call to action at the end. No saying, oh, can you meet at some point next week or these different days and everything? Clear call to action. All right, Chris.
That's good. Thanks for keep the questions coming. All right, Anna, I'm going to put you on the spot, unscripted. Anna was at a large broker-dealer doing sales and trading. We hired her to raise money. She's new in the last, say, 2 years of raising money. Talk about your experience. You came in here. You didn't have a, quote, Rolodex, but we have Marketplace, so obviously you can dovetail off of that. We have a lot of relationships. You've been doing this 2 years. What would the feedback you'd give for somebody out there saying, geez, I just started in this. We get that a lot. I just started in this position. I came from consulting to raise money.
Yeah, I think number one, it's following a very simple process and coming in every day and knowing what your plan is going to be that day. It makes it a lot easier to digest your workload. And we talk about this a lot with city scheduling, Guy, and it's the way I was trained is city scheduling. And to this slide, creating a sales plan and then executing against that sales plan. You figure out what's the key channel you're going to cover. We're talking about RIAs today. And then making sure you're executing against that. And we do it through city scheduling. And so when you think about RIAs, which is obviously a lot of where we spend our time, there are over 30,000 SEC registered investment advisors. And so how do you narrow that down? You have to figure out which ones allocate to outside managers. And we've done that in Marketplace. We have I think it's around 2,000. Guy, correct me if I'm wrong.
Yep,
But that's
you're right.
that list is much easier to digest than 30,000. And then you break it down by metro area, and you put the cities on the calendar, and that's how you cover every metro area. And then to Guy's point, you know exactly where you stand with each one. Okay, I've been prospecting for this product with this fund. This one I haven't gotten to yet. That's my next account.
Go through the list for just a refresh, and for our listeners. We go from how do we define it? A number 1 to a number 5. What's a number 5? We know prospecting, correct?
Yeah.
So you're saying bucketing them like we do in Marketplace against the sales cycle. In Marketplace, we do sales cycle management at the account screen, so you can bucket. But as we're kind of coming up on time, and Anna, you're exactly right, is I just want to go through the sales plan. So the sales plan isn't to write a sales plan, okay? The sales plan is built, and a lot of people do it, whatever, it's all different variations. You're not doing it to write a sales plan. You're doing it for CYA, for your boss, okay? Because what you want to do if you're an emerging manager and you're working for an emerging manager as a salesperson, okay, that the salesperson to the boss running the emerging manager firm needs to know what the plan of attack is, what your plan of attack is, and you're going to define what success looks like. And you're not going to make it about raising money. It's going to be about covering accounts. That's all you care about. If you're an emerging manager, now I'm speaking from the standpoint of how do I take care of my fellow salespeople so they're protected. This is the way we do it here. We write a sales plan, and we get our boss to agree to the plan, to what success looks like. And you got to get uncomfortable, and you got to give pushback, because what you're going to say is, I'm going to cover these channels because this is who buys our strategy. And I'm going to go out and I'm going to get answers on each one of the accounts within that channel. And I'm going to get feedback, and I'm going to build a pipeline from there. So you have to judge me in all the meetings that I get, not number of meetings, just get into meetings with those qualified accounts, qualify them, ask the tough questions, and then have a weekly or biweekly reporting cadence with your boss. And then that way they're going to know the entire time where you stand. They feel like they're going to be in the know. So secondly, super important, if you want it 5x to 10x your time, you do it with a CRM like Salesforce. There's 8 other awesome CRMs that we have in one of our blogs that work really well, and they're even more specific to fundraising and investment firms. You enter every meeting that you do, and you schedule in your CRM. You create a report of past activity. You look at all the past activity that you've done, and then that'll trigger sales actions, because time flies. The more meetings you do, the harder it is to keep track of who you met with and then what you have to do. And then 3, you create opportunity reports or scorecards. So when something actually is live and they're interested and they want to do more work, you have to be able to go to a place very quickly and see exactly where you stand so you can take action to move those into the next sales cycles. So we'll follow up with everybody that's on this call with this written out in detail. But utilizing a CRM, putting your meetings that you scheduled, running past activity reports, and then running pipeline reports that you'll share with your boss is the ultimate follow-up system that saves you so much time and allows you to focus on sales actions, looking at that list. And that's what we've done here. So, Chris, I know we're probably
let's I mean, everything's structural here, and it's a system. But let's get to a few. Let's just fire these out. Let's have a rapid fire question, Guy. How many salespeople / fundraisers do you think you need to hire to launch a new fund to properly cover key metros?
One.
I agree. The world's small. The country's small.
If you follow our city scheduling process, 1 is all you need to start.
All right, here we go. Excellent. I agree. Sales need not be expensive, and you need not have a behemoth sales force to really accelerate the message.
Fundraising is different than software sales. Software sales, the more salespeople, the better, if you have a good product. Fundraising, you need 1 salesperson who's calling on the right buyers, getting the meetings, and getting the quick no's or the advancement to the sales cycle.
All right, keep these questions coming. Let's hear thoughts on what would be, quote, in-market sales calls activity for a given week or month for a salesperson. Sounds like, how many calls should I make a day, a week, a month?
You want to send out 20 to 25 emails a day, meeting requests, and trying to schedule meetings. And then what you're just doing is covering the accounts, and you're just trying to do your best. So for instance, if I started with a $50 million mutual fund, let's say that has a 1.5-year track record today, I would go to each RAA. I'd start with the major metros The top 14 metro areas, top 14 by number of RIAs, represent 50% of the total RIAs in our database. So I'd focus on those 14 metro areas and scheduling meetings in those 14. And if you're just focusing on doing 2 to 3 meetings a week, days of travel a week, and then I would start wherever you live and just go out. So if that makes sense.
Listen, momentum breeds momentum. If you're getting hot in Birmingham, go to Atlanta. If you're getting hot in Chicago, go to Milwaukee. But it's momentum. And if you're ice cold in Boston, go to LA. It's momentum breeds momentum. What size does AUM become sensitive for a long-only U.S. equity manager? What is too small? Well, 0 is too small, but I mean, actually, negative is too small.
With my friend, our customer Andrew today, 3 is really tough. I think as you're getting at over 25 million to 35 to 50, you're becoming in the game. And then someone's not occupying more than 20% of your fund if they make an investment. So I'd say 25 million is kind of a really nice amount.
Okay, this question, let's dovetail. You know what, in the interest of time, we're going to get back to everybody, but this question is going to dovetail to probably the final, which is killer follow-up system, which is, I would give you credit for that. That's my birthday present to you on your birthday, is that you are the founder of killer follow-up system, at least that expression. How important is reporting to RIA clients when investing in non-liquid alternatives such as hedge funds, private real estate, private equity? That's number one. The follow-up system, just had a meeting following up, but also these folks are invested in my strategy. How do I make sure I'm staying in touch with them as well? So there's 2 follow-up systems
Chris,
here.
I think the question you just asked was how important, you said, is performance reporting on a private fund.
Keeping them abreast of what's cooking in the portfolio and things like that. And that kind of leads to our quarterly updates.
Typically do it monthly, absolutely quarterly, and you absolutely should. I believe you need to respect your clients and do a quarterly webinar and give them an update. So it's the greatest form of leverage. Everyone's going to get a link to our ebook on how to create a quarterly call. We go through it in detail. It's free. You create all this content. You do email marketing, inviting people, follow up, transcription, abstract. Quarterly call is mandatory. If I was your coach, I would say it's mandatory to do a quarterly call. We get 400 to 500 on the Edgewood quarterly call, and all Alan does is update people and show him his thinking, and we raise money on the quarterly call. It's unbelievable.
No, that's you're glossing over it just in the interest of time, but definitely everybody focus on that. That is, I think, one of the greatest secret sauces out there. I mean, for example, we had a manager that was on the value bucket, and things got a little, the dips in the quarterly calls went down, and now we're starting to see 2x people dialing in because value is more topical. It's just a great way to really flush the interest in the marketplace as well.
Yeah, consistency. So, all right, Chris.
Last one, close on killer follow-up system, because we're going to follow up with our future call, which you're going to announce. But also, everybody, give us the insight on the killer follow-up system.
Yeah, so actually, when I just did go through it, the killer follow-up system is using a CRM to your advantage. I was with an amazing long-only firm. I went on Zoom and did a presentation and Q&A on their national sales meeting. And one guy asked a question. He's awesome. But he goes, Guy, 13 years, I've only used Excel spreadsheets. I'm like, well, you're leaving money on the table for yourself. If you put everything in a CRM, you're going to leverage your time. You're going to create more opportunities for yourself. That's the killer follow-up system. Have the discipline just to enter the littlest information into a database, and you'll be able to follow up very, very quickly. And it works like a charm. So everyone, I can't tell you much. I appreciate you, our customers, our prospects, you guys coming on. Hopefully this information was helpful and will create a lot of shortcuts for you in terms of your approach to sales. Our next call will be Tuesday, March 21st at 1 p.m., show number 7. Thanks so much, everyone. Anna, Chris, you guys were awesome. Love being on with you, and I will talk to you all soon.
Thanks a lot, Guy. Appreciate it. Happy birthday. A lot to discuss, a lot between now and the next call, so please reach out. Look forward to continued conversations. Take care.
Hello, everyone. Just wanted to say thanks for watching. Hope you enjoyed the show. One thing that I think you do know is all of this information that we covered exists in Dakota Marketplace, our institutional investor database. Even this show that we just cut will end up in Dakota Marketplace so you can view it. And if you're not a member, we would love to show you the platform. Just simply go to our website and get a free trial of Dakota Marketplace.